In today's video, I want to show you which 3 stocks are the most undervalued right now in the S&P 500, which could present you with a good buying opportunity. As always, this is not to be taken as financial advice. Please do your own research before making any investment decisions. Right, let's get into it. The piece of software that I'm going to be using to find the most undervalued positions is called Forecaster.biz, and they have a new feature called Rankings, which you can find by going to the top right up here. Now you can look across all the global most known indices. More are coming soon as well on this platform, but the one I'm interested in for today is the S&P 500. Of course, those big 500 top US companies. Now there's many things that you can do on this platform, but in particular, we are interested in this ranking tab. But you can actually see that right now the entire S&P 500 index is actually undervalued by 16.12%. This means that the S&P 500 is 16.12% below the fair value, which actually might be quite hard to tell if you just look at the stock chart, because obviously what you'll see is that actually the S&P 500 by large is approaching all-time highs again. So you might think that it's really overvalued and you should stay away. But actually, what we're finding out here is that it's quite significantly undervalued right now. But let's just say you don't want to invest in an ETF. You don't want to invest in the entire index, and instead you actually want to pick individual stocks. Well, you can use this platform to filter by sectors, by the top 10, top 30, top 50 stocks in the S&P 500. For today, we are going to actually filter by the top 50. And then it's telling us that the top 50 of the S&P 500 is currently 9.23% below the fair value. And what I really like about this is that you can actually filter by market cap, price, Z-score, F-score, M-score, value generation, but also this fair value tab here. You can go from the most undervalued to the most overvalued quite simply by one click. And if you're wondering how Forecaster.biz actually figures out whether a particular stock or a whole index is overvalued or undervalued, well, actually they use 3 different methods of valuation. They use the discounted cash flow, the Peter Lynch method, and also the economic value added method. And then what they do is they take an average of these 3 methods to get the average fair price. And by doing this, it means that you're not just getting a figure by using one part of the financials or just one part of the balance sheet. For example, the Peter Lynch method, if you were using that one in isolation, you would only be looking at earnings and earnings growth. So by taking all 3 and getting an average, you are finding a much more accurate fair value. So let's filter this, and then we are going to work backwards. We're going to start with the 3rd most undervalued stock, and then we are going to work to the most undervalued stock in the S&P 500, which you'll find later on in the video. Okay, so here we are. The 3rd most undervalued stock in the S&P 500 right now, if we filter by the top 50, is Wells Fargo. If we open this up here, you will see more information about this position, and what we can learn quite quickly just by scrolling down is that at the moment, this position, the average fair value is $103 per share. The current price is just under $60, which means that this position is 71.84% below the fair value. That could represent a really good buying opportunity. But of course, you should do way more further research before adding any stock to your portfolio. In case you didn't know, Wells Fargo is a financial services company offering banking, investment, mortgages, and much more. And they are actually both located and operating in the US, but also on a global scale as well. They recently announced their Q1 earnings, and actually they performed pretty well. They beat both top and bottom line estimates, and this did cause the stock to increase, but we will come back to the stock in just a minute. They also did quite well in their Q4 earnings, meaning both their Q4 and their Q1 earnings were good, even though quite difficult macroeconomic challenges and concerns were present. But that's something to be aware of. Banking stocks do tend to be quite cyclical. So just because these sort of earnings have happened, this quarter and last quarter, it doesn't mean they're going to continue indefinitely in the future. And we are still in a period of quite strong uncertainty, definitely when it comes to the likes of interest rates. One concern I have for Wells Fargo when I take a deeper look is their ability to cover their debt. Their debt to cash ratio is definitely not looking as strong as some of their competitors like Bank of America or JP Morgan, for example. And they have had substantial scandals in the past, but they do seem to be putting those behind them and moving forward. And this should help them. legal expenses wise. And then this can lead to improved profitability in the future. They are continuing to buy back stock, which I think is quite a bullish thing to see. Some investors really, really hate share buybacks. Others think it is quite a good sign. Something else to be aware of when it comes to Wells Fargo is they do pay a dividend. They have a dividend yield of about 2.6%, but I wouldn't say the dividend stability, the dividend consistency is all that strong. They've only been consistently increasing their dividends for about 2 years. So just having a look at the stock now, we're going to look at a 1 month period first. And what you'll see is Wells Fargo is in this dark blue line. And then we've got the S&P 500, the index in the yellow line, JP Morgan and Chase in the turquoisey light blue color, and Bank of America in the orange. I hope that's clear. But first thing to point out is that Wells Fargo on a 1 month time period has performed the best. It's outperformed the index. It's up by just short of 5%. If we go to a year-to-date period, again, the same thing is happening. Actually, Wells Fargo has not only beaten competitors in terms of stock increase, but also the index. However, if we zoom out to a 5-year period, things start to look a little bit different, and you can really see the cyclicality, is that a word? Cyclicality and the seasonality of banking stocks. And actually, on a longer time period, the S&P 500 has outperformed, and JP Morgan has outperformed Wells Fargo as well. Okay, so back over to Forecaster, and let's see which is the second most undervalued stock in the S&P 500 out of the top 50 right now. What we can see is coming in as the second most undervalued is AMD, Advanced Micro Devices. AMD is currently trading for a price of just above $150 per share, which the fair value on here is $439.28 per share, which is representing 191.69% currently below the fair value. So this could be one of those really undervalued opportunities in the market. One thing that I would say with AMD that we've definitely seen quite recently, in fact, is that it does tend to be quite a volatile position. It can go through those really, really upward quick motions, but just like it can go up very quickly, it can come down very quickly. So if you are going to have a position like AMD in your portfolio, please be emotionally ready and have a strong stomach to actually see that volatility take place. I've just gone on to the overview section on AMD on Forecaster, and what we can see is that over a 1 month time period, the stock has been hit pretty hard, down by nearly 12%. And this has happened even though they had a recent earnings and they beat. They beat on the earnings. So some would expect that actually the stock would increase, but you can never predict what's going to happen around earnings season. It's a very manipulative time, and you can't bet that just because they do well, it's going to go up, and if they do poorly, it's going to go down. We've learned from this earnings season so far that just, you cannot guarantee that. So what happened during earnings? Well, AMD did beat estimates, both revenue and EPS. However, this was a very, very close call. They only just beat estimates, and this meant that the stock did fall in the days post-announcement. But why are some people bullish on this position? Well, one thing is just the growing demand for artificial intelligence, and also alongside that, the data center total addressable market, TAM, is expected to grow at over a 70% compound annual growth rate from 2024 to 2027. That is pretty substantial. Now, the likes of Nvidia will definitely benefit from a large deal of this, but could AMD benefit also? It's very, very likely. And actually, we saw that their data center segment, that's quite hard to say, the sales from that rose by 80%. And this was partly powered by the launch of their new graphics processing unit, their new GPU, which is designed to support generative artificial intelligence. Now, some tech analysts have said that this GPU is better than Nvidia's H100. I'm not in the space enough to know whether or not that is true. I know the H100s that Nvidia have are very, very popular, but AMD are definitely being somewhat competitive. And already AMD have some massive customers for this GPU, the likes of Meta, Microsoft, and Oracle. But even so, their biggest competitor, Nvidia, right now are just on a completely different level in terms of sale and in terms of revenue. For example, AMD is expecting $4 billion in 2024 from AI chip sales, whereas Nvidia have already reported $18.4 billion in sales for January alone from their data center segment. So you can see the difference here, but I definitely think there is room for more than one player. So AMD's earnings were actually quite mixed when you start digging in deeper. Their revenue was up year over year by 2% and their net income year over year also increased. However, their gaming segment sales declined. They declined quite dramatically, I think by about 48%. However, their desktop CPU segment saw annualized gains of 85%. So what you can see here is that some of AMD's segments did particularly well, others did quite poorly, and overall it was a mixed result. However, they did increase their AI chip sale guidance for 2024, which was pretty bullish, and their guidance for Q2 was at a midpoint a revenue increase year over year of 6%. So they are still expecting accelerating revenue growth, which is absolutely what we should be seeing. AMD are also expecting their gross margins to continue to increase, which then leads to them actually generating higher profits. Again, very, very good for potential investors. So when we're looking at a 1 month period, we can see that AMD stock has underperformed the index quite significantly. And what that tells us is that the market isn't really interested in moderate beats of earnings estimates. They want above and beyond. But when we zoom out to a 6 month time period, it has outperformed the index. However, like I said earlier, this tends to be a very, very volatile position. Is AMD currently undervalued in your opinion? And if so, are you buying it right now? Let me know in the comments below. So now on to the most undervalued stock out of the top 50 within the S&P 500. And I must say, I could not agree more with this one. This is my biggest position in my own portfolio, and I am very, very bullish on this for the future. So it is, of course, Tesla. Tesla. You either love this one or you really don't like it. There is so much going on in the world of Tesla right now. And let's just see what the average fair value is coming out at. You can see here, we are nowhere near. This is representing a current price of $181, saying that this is 476.48% below the fair value, which is coming out at just over $1,000 per share. Now, there are people like Cathie Wood that have a very, very bullish price target for Tesla at like $2,000 per share. So some people may think that Tesla is even more undervalued than what we're seeing here. But I do agree with this. I think that Tesla is one of the most undervalued, underappreciated, misunderstood companies in the world right now. And like I said, Tesla has been pretty wild recently. So much new information and news has been coming out. And of course, we have had the earnings, which actually they missed. They missed earnings. However, the stock went up by like 25% following that. So what happened? You know, like I said earlier, you can't predict that just because a company misses earnings estimates, it will fall. It does not always work like that. So why did Tesla go up so much even though they missed? Well, I think this comes down to the guidance, the commentary, and just how Elon and the team held themselves on the call. Now, I did do a whole video, a really, really in-depth video on everything that you need to know about Tesla earnings on my main channel. So I will link it up on the screen now if you do want to go and watch that. But let me just try and give you a shorter version of what happened. So revenue fell by 9% from a year ago, which was actually Tesla's first drop in 4 years. The total automotive revenue segment was down by 13%. However, their other two segments, which are energy and services, were up. Let me show you this on Forecaster actually. If we scroll to the bottom of the page on fundamentals, you can see the revenue by products. And what you can see quite nicely happening here is that actually, although the automotive revenue segment is the majority right now, what you can see is if you look closely here, the energy segment and the services segment are growing. They're growing at a pretty good rate. And as Tesla develop, I just have to think, what will this look like in 2 years, 5 years, 10 years time? I really, really, really think that this will look vastly different, and actually the automotive segment will become lower and lower and lower. Now, I'm not saying it's going to stop growing. What I'm saying is it will become a lower proportion of their total revenue because the other areas will increase. And this will especially happen as they increase their higher margin businesses. And actually right now, energy is their highest margin segment. This is an image that they shared during the earnings presentation actually. And what you can see here is that this is Tesla's ecosystem. And selling EVs is just one part of their bigger plan and their entire ecosystem. You know, on top of the vehicles, we have humanoid robots, Optimus of course, we have their energy segment, lithium refinery, FSD, their robo-taxi fleet, the app that they previewed during their earnings, and just so much more. And how will this expand over time? If, of course, you believe that Tesla is a car company and they're always going to be a car company, then you might look at the value that we just saw on forecaster.biz and think, actually, do you know what? They're vastly overvalued and you don't agree with that. However, if you see Tesla changing as it is, you know, the numbers and figures are there, and you don't think they're going to be a car company, and they're not a car company, they're an artificial intelligence tech, you know, robotics company, then you can start expanding how you value them. And when you run the numbers on the possibility of Optimus, robo-taxi fleet, everything else that they're doing, it does get a little bit wild. I recently learned that Walmart has actually taken delivery of a Tesla semi-truck, which is quite big news because obviously they are a massive, massive company. And this, of course, comes after PepsiCo are working with Tesla. Now, there are so many little nuggets and little areas of Tesla that people just completely forget about, the semi-truck being one of them. But if this vehicle, an electric truck, is able to save companies a lot of money, it's a no-brainer for them. Of course, they are going to make the switch. And right now, the semi-truck isn't in full production. You know, they're not pumping out loads of these things, but they will ramp that up slowly and it could become quite substantial in the future. We've also had Tesla post another video of Optimus, which I was waiting for. I'm very excited to find out about. I'm so bullish on the possibility and the potential of Optimus. It could be absolutely massive. And they've currently got Optimus in Tesla factories now learning to do useful work. This is a bit mind-blowing because they're going to put Optimus in Tesla factories. They're going to save on costs within Tesla using them. Then eventually, you know, other factories will need them. Then they'll expand out into the homes. And at that point, I think Elon Musk is anticipating that it could be anywhere between 2 to 4 humanoid robots per person on this earth. So what does that mean if Tesla have the majority of the market share? The numbers there are just insane. Tesla would become the biggest, the most valuable company in the entire world. Of course, we're not there yet. You know, this is what we're expecting to happen based on our research as people that are very convicted in this stock. We're not there yet though. And you have to remember that when you're valuing this company, but the potential's there. I really do think that. There's been news recently that Tesla may have gotten approval for FSD in China, which is very, very big because right now autonomous driving is only active in the US market. And China is, of course, a massive, massive market. Currently, only Tesla and BYD are actually making money on their EVs. And, you know, Tesla potentially, could they launch robo-taxi in China before the US? Some people think so. Personally, I think they will roll it out within some states in the US because remember, the US is split up into many different states and it's not just going to be a mass rollout of FSD, autonomous driving, robo-taxi, you know, statewide. It's going to happen in selected states first. Maybe San Francisco, I think, might be first, just because they already have the structure in place with Waymo and whatever else is going on over there in terms of autonomous driving. But yeah, I don't think China will come first. I think the US will come first, but potentially when we think about, will they launch robo-taxi in China before the whole of the US? Every state in the US? Potentially. Maybe. I don't know. But either way, the things that we need to happen to make this a reality are absolutely starting to happen. There's so much more to say about Tesla, honestly. I could talk all day about this one, but out of the 3 most undervalued stocks in the S&P 500 that we saw by using forecaster.biz, I am most bullish on Tesla, and that is the one I am currently accumulating as many shares of in my own portfolio. If you do want to try forecaster.biz, which I highly recommend, you can use code Haley10 for 10% off as it's seen on the screen now, but you can also go and try it out for 24 hours for free and then use the code for 10% off after if you like it. Now, there is something very important that is happening in the world of Tesla right now that every investor should absolutely know. If you don't know what I'm referring to, please watch the video on the screen now. Thank you so much for watching this video. Until next time, keep analyzing, keep investing, and don't forget to hit that subscribe button.